Thank you for joining us for another episode of the 340 Banter podcast. Today, Michael Gonzalez joins to talk us through some challenges and strategies in making sense of the non-standardized financial reporting from different vendors. Particularly in recent years, finances for health centers have been really tight. Well, health centers, hospitals as well, and particularly around the 340B program, as it seems like the program keeps getting kind of tighter and tighter on the application of 340B eligible claims in contract pharmacy spaces, and now kind of bleeding over into entity-owned pharmacies and clinic and physician-administered drugs as well. And along with that change has come, I feel like we've gotten more and more questions around 340B financial tracking, some of the reports that come through different platforms. What do the different numbers mean? How can the organization keep a better finger on the pulse of the financial health of their 340B program? Because ultimately that's tying into the financial health of their organization at this point and helping keep the doors open. Because we get so many of those questions, I was hoping we could talk today a little about some of the things that health centers in particular should be paying attention to or can be paying attention to in regards to their finances for their 340B program, and also some of the tips and tricks for navigating the different reports from the many TPA and vendor platforms they have to interact with.
My biggest recommendation is meeting with that vendor that the report comes from and understanding exactly what is your accounting report, what is your finance report. We have instances, Chelsea, where we have seen things that have been labeled something like monthly finance report or something, something general report. We have thought that was the report that we were supposed to be using, and then we find out, no, that's not right. And we're like, so I think one of the things that is really important is like get with that vendor, make sure you know what the finance report is. Is this showing all claims that were qualified as 340B this month, but actually you're on pay upon replenishment? Because if that's the case, then from an accounting perspective, you actually need to wait till you replenish those drugs to accrue them.
Are they all of the claims that pass 340B eligibility standards, but not business standards? So your, winners only, brand only, whatever manufacturer restriction models, because we have some reports that also operate that way that say, okay, all these claims meet your patient and location and prescriber eligibility standards. And so they say they're qualified, but they're not actually captured because they don't meet those business standards.
That would be a really interesting concept, is coming up with not that I want to do this, but almost not, like it's like, oh, this would be good, but no, I don't want somebody else do this, okay? But like a standardization process where, like, you see all these people who are accredited with different things, like, and this report is accredited as the accounting report that you should utilize from this vendor. Like, we could totally do that for No, we're not. I want no more responsibilities, but that is very difficult because you'll assume one thing based on the words and languages that are used on reporting. And
TPA to TPA, those same words can be used and they can mean very different things.
Net revenue per claim, I know, can be really challenging because in some TPA reports, we'll see that accounts for just the pharmacy administrative fee or dispensing fee and the TPA fee. Sometimes it includes the 340B cost of the drug. Sometimes it only includes the cost of the drug and not the fees associated with it. So being able to determine what actually is baked into that so that you can subtract additional costs if you need to in order to get to true net revenue is really important, but it's hard if you don't know what that information in the report represents.
And really important while you're talking about cost of drugs is on almost all TPAs, not all, but almost all TPAs, that number reported for drug costs is always estimated.
Yes.
Okay. And so you should never be using it. There are very few instances in where you can, but you should almost never use the drug cost that's reported there as an accounting metric. Okay. Those I always recommend, like,
and that's not clear on the reports that it's
no, I know. And then we pass that information through, and then health centers want to know what's going on. use your wholesale accounts. That's where you actually paid for the drug. You should be getting those invoices daily. You should have an online portal which you can pull that at any time. But when you're booking your cost of goods sold, particularly when it comes to those contract pharmacies, you want to use actual wholesale.
Yeah, a lot of
even
times
at your
you'll get a
in-house.
discount from your wholesaler, or you'll be a non-preferred client of that wholesaler and you'll get a cost plus. So it can go either way, for or against you.
But important to know then, if you're getting the information from the TPA and you have a net revenue per claim and they have subtracted out the estimated 340B cost, being able to back out of that to be able to track your revenue and then be able to use the information from the wholesaler for true cost of goods is really important.
And I think you mentioned having a meeting with the TPA. And I think that that's a place I'd really recommend getting your pharmacy or 340B team in that meeting with the finance team and the TPA, because us as pharmacists are going to look at things differently than you as an accountant, and we're going to hear things differently. So having both people in the room, that way we can hear things in our own ways, ask questions if we don't understand, and one of us can interpret what the other is not getting. I think it's a great way to work collaboratively at your health center.
So one of the questions that you kind of briefly touched on so far, but one of the questions that we've gotten more frequently is around the financial reporting aligning or misaligning, particularly when there are differences between pay on replenishment or pay on dispense models within the same TPA. So you may have multiple pharmacies within the same TPA or managed by the same TPA working under different models, but can also differ from TPA to TPA. How do you recommend that health centers work with that information, make sure they're working with the right numbers in booking? I know particularly the questions we keep getting is how do I need to book this ultimately on the finance side of things?
I recommend pay upon a dispense. You book it, you go ahead, and what will end up happening, that the wash on that will be typically this remediation or this true up that we have on the back end, right? So if you can't replenish it within a certain amount of days, then you're going to buy back that drug for them and pay that fee. With the pay upon replenishment, I recommend booking on replenishment. Now it's very difficult, Chelsea, for me to give you specific details on that, right? Outside of like, you need to work with the vendor because each one of them has a completely different methodology of like what even ties to what you get paid.
Yeah.
And that is insane to me, because accounting, essentially everyone should be receiving an accounting report, because there's a lot of money moving around here from contract pharmacy to TPA then to us. But accounting is a very simple, we try to make it very complex. It's a very simple system. Everything balances in account. Like that's one of the things like
or
you learn.
Hope it does.
No, it's supposed to, or it's wrong, right? Or it's not right.
Yeah.
And so like it is one of the most simple systems that exists in the world. And when we can't get reports.
I really wanted to make a joke about that's why you did it, but I couldn't formulate the full joke. So there it is, a half-baked joke.
That is why that's my background. If you can't make something simple, I think it's very hard to understand, and it proves that you don't have a clear understanding of it. Just given that accounting we know is a cut and dry program. It's simple. It's this has to balance to this, and that I can't readily seek reports on that at some places. Like, I don't know. This is one of those like soapbox things for me that I'm like, I've always been complaining about and thinking there's got to be a better way to do it. But the best recommendation I can give is, either working with someone who understands the vendor you're utilizing, or working with the vendor directly to make sure that you are getting the report and get what they say in writing is a recommendation that I get, because sometimes you'll hear things from certain people and then they end up not being accurate.
Or you hear what you're expecting to hear. There's also the bias as you're processing information from your standpoint. So getting it in writing also can help in that regard.
I think what we've heard from some TPAs is that often they have a monthly or a quarterly meeting, and those aren't always not every covered entity really utilizes that time. And I
Yeah.
think it's a great time to make sure you have a pulse on your program and the reports. Have there been any changes to the reports in the last quarter, or just, hey, am I understanding this correctly? This is how I'm interpreting this. Just so you're constantly improving on that, because we know that 340B is always changing. So those reports could be changing.
Yeah.
And I think another thing, I kind of focused my discussion initially on contract pharmacies, but on the in-house pharmacy side, I think a sometimes underused service that I think is very valuable and fairly cheap for what you get is the reconciliation services
Agreed,
that are
completely.
in the pharmacy filling softwares.
Yes.
It's my understanding that they are not very expensive. But the amount of work that it would take your team to try to do the same thing, just because they own the system, so obviously they can do that more efficient than you can when you're outside the system. If you're not using a reconciliation service for your in-house pharmacy, I think you're doing yourself a disservice. And
the return on investment is
it's astronomical.
Generally because generally it's going to be a pharmacist doing it if it's internal, just because of the complexity, and it's probably 3-4 hours of a pharmacist's time for the monthly fee. Right. We actually recommend if you have a PSAO, Pharmacy Services Administration Organization, they generally offer it, and it's a great idea because they're seeing all the claims that are leaving because they're your pharmacy network. So then they're able to reconcile those claims that are coming in accurately. Another benefit to them, a lot of them will seek out under or missing payments. So they do the work of reaching out to those payers, because anyone that's called a PBM knows that it is painful and takes hours to get to the right person. Let the team that has that experience.
You really, really like hold music. then it's a brilliant, fabulous Tuesday afternoon.
Absolutely. And so to clarify though, so I may have misspoke then, because I said the pharmacy filling software.
Some pharmacy software also has reconciliation.
But we typically go to PSAO if we have PSAO.
Yeah, I think that's just the easier. It typically is a less hands-on option, and they're about the same price is what we've seen.
Fair.
So I want to ask a question, kind of go back to contract pharmacy for a second. In pay on dispense models, where you often have to go through those true ups for drugs that you've been paid the 340B revenue on, but then for whatever reason, the drug hasn't been able to be replenished. Do you see covered entities holding money in escrow for those situations? Do they kind of treat the revenue? From an accounting
perspective, like expecting a true up?
Yeah.
Not typically. Not it's all about materiality, right? And so if materiality is not very high, if it's less than a certain amount of percentage, and again, that percentage can vary depending on your entity or total dollar value. But usually we're not setting up an escrow for that. We book it as that occurs when the true up occurs, because at that point, up until the day in which that true up is deemed, flagged and said, okay, now we're in true up phase, now you got to pay this money. Up until then, we have the opportunity to replace that drug, and we try to.
Yeah.
And usually, there's kind of two main things that cause it. The biggest, most common thing is, package size not being met, right? And so if it's a bottle of 100, we only dispense 30. We don't fill any more of that drug at that pharmacy. I can't do anything.
Yeah. Well, that's also how you get into kind of updating your contract for your inventory. For that pharmacy, so you can say no 1,000 count bottles,
Correct.
no 500 count bottles. This NDC, please block it because we don't have enough of it, and we're sick of doing true ups.
And then over the last couple of years, we had some anomalies with some drugs that were unavailable, right? That they had supply issues with. I think Ozempic was one of them for a little while, where that was difficult.
And some of the manufacturers have we have a partial solution there with the credit-based replenishment, but now some manufacturers are blocking those credit-based replenishment models, so it does create that issue when there are supply.
Yeah.
But to answer your question, no, typically don't see people report those. But same on the pay upon replenishment model, where technically revenue is not booked. I have seen instances where people will try to book that revenue on the front end and then ask me, well, why is there this huge receivable? Well, because You're not booking that. They're used to these old models of the pay upon dispense. So it can be confusing. I think
And
that
it is confusing if you don't understand the way those 340B replenishment models work.
Even if you do, it can still be confusing.
Yeah, well, that's true.
And if they're getting dumped into the same report together and you don't know what what perspective to take each line.
I can think of a recent place where we saw that in the same vendor. The good thing is most models have got away from pay upon dispense and have moved to pay upon replenishment. It's more fair to the pharmacies.
Yeah.
Because the pharmacies don't have to give up that money until the drug is replaced, or if you never replace it, they never give you up the money. And then on the flip side, you don't have these true up costs, right?
Yeah.
And so though it can delay cash flow when you're implementing that model, much better financially for all parties. Yeah.
Especially for your independent pharmacy partners, because that cash flow is a big concern.
So what final pieces of advice would you give to folks that are kind of starting to dig in more to their 340B finances, just to try to understand their program in these trying times?
And I think the simplest way to say this is like, whoever cuts you a check or passes the ACH to you, you need to understand their reporting system. And so sometimes that's usually at contract pharmacy, that's the TPA, but some TPAs aren't the ones who cut you the check, it's the pharmacy. So you got to kind of understand, as the covered entity, who cuts that check or who pushes that ACH to me, what's the money getting received from directly, and understanding those reporting. And then 2, on the other side is kind of what we discussed in the beginning, is the cost of goods sold. That number, if you're booking accounting journal entries for cost of goods sold, that number should not be coming from a TPA. That number should be coming directly from the wholesaler and what you're paying.
I'm going to just add on to that because this has come up thrice for me in the last month. If you don't have access to the wholesaler accounts, particularly for your contract pharmacies, people should get the access to those wholesaler accounts. We've had a number of instances recently where trying to understand a situation or a misalignment of finance information and finding out that the folks at the covered entity, nobody has access to the wholesaler accounts. Perhaps it was a historical thing, whoever set up the accounts has since left the organization. And then that information didn't get passed on to anybody else. And it is really crucial to have visibility to that information.
And it's very easy to get, even if you don't currently have your own access, you can get it pretty easy. And the greatest thing is you can run reports for different time frames, which make your life in the accounting department much easier.
Yeah. And I think from the pharmacist perspective, I would recommend that if you don't understand these reports or don't understand what finance is asking for, sit down with them, have a conversation. You can get to an understanding of where you're speaking the same language. And we're often looking for the same thing. We're just calling it something different. So working with those teams to really bridge that gap will make your interactions in the future so much easier.
Absolutely.
Thank you for listening to 340 Banter. This podcast is produced by Grit and Gravel, your partners in marketing strategy and success.